How do you properly value a company? Well, there's a lot of different metrics that you can look at to determine a company's value. And the good news here is that Pro, not only is it going to give you a lot of these values, but in some cases, it's going to do the calculations for you. And this is another reason, one of the reasons why I wanted to cover this is because I wanted to show you how valuable the details tool is. So, like I said, this workspace is designed to show me information based on some other tools. So the calendar down here is showing me unusual options transactions. The scanner up here at the top is basically scanning for relative volume. I need to know when a stock is trading at 300% its relative volume. That generally tells me something's going on there or there's some type of momentum there. And so I use these tools to identify different stocks. But once I've identified a stock, then I use the details tool to get information about that. Now, for my example here, I don't want to start off with a micro cap. I'd actually like to start off with a stock that we're all familiar with, like Tesla. Okay, so let me just go. I don't know why I must have clicked the wrong thing there. Sorry about that. We're going to start off with Tesla here. So, okay, Tesla had a big move here. It's up 3.4% here today. It's really been kind of gangbusters since Trump won the election here as Elon's part of his staff. So company seems to be trading up based on that. But if you said to yourself, I want to know how to properly value Tesla. How do I do it here in Pro? I mean, you're going to be thrilled with how easy this is. So first of all, let's talk about a couple of different ways to value a company. Number one, you can just take a look at its price to earnings ratio, right? This can help you determine if a company is expensive or if a company is priced well. And one of the things that you'll notice is that if you click on the overview tab of details, you're going to be presented with a wealth of information. And in one of the buckets on the right-hand side is going to be key ratios. This is a good one. I use this, gosh, I must use this multiple times every day throughout the course of my day because I'm just looking and I just know where this information is and I can glance at it and get it. All right. So right here, this has got a forward price to earnings here of 86. Now, generally speaking, the higher the price to earnings, the more expensive the stock is. The other thing that this does is this kind of gives you an industry average to compare it to. So price to earnings here for Tesla, 86.20, industry average 25.7. So it is vastly higher than the industry average. But why is that? Tesla is kind of its own story, right? This is not like GM or Ford or Toyota. Elon Musk is viewed as a genius. They're dipping their hands into different things. They've got EVs. I know SpaceX is its own company, but the CEO is the same, so it's related in that regard. Technology company, as it's called by a lot of people. So you would probably value this company differently than you would value Ford. And one of those things are going to be its growth. There are a lot of people expecting tremendous growth from Tesla as it continues to mature and become a more mature company. And as a result, you're going to be able to have a higher PE on that. Different stocks trade at different PE buckets. Semiconductors is a really good example. Traditionally, years ago, semiconductors used to trade anywhere around a 15 price to earnings. You look at NVIDIA now, let's actually take a look and see what NVIDIA is real quick. Let's just go ahead and type in NVIDIA into the details tool. Price to earnings here, 37. So this is more than 2 times the average price to earnings for a semiconductor company in there. You can see the average here has actually crept up as well. Industry average for price to earnings here, 37. Traditionally, it was half that. All right, so this can just kind of give you an at a glance idea of how expensive the company is, just generally. Okay, sometimes you'll notice that companies don't have a price to earnings. That's because they don't make money or they don't have any earnings. Thus, there's nothing to put in the denominator there, and of course, you can't divide by 0. So that's why you might not see a price to earnings for some of these companies. But price to earnings is not the only way to value a company. One of the other really quick ways that a lot of our investors in our happy hour show do is they take a look at its market cap to revenue, right? So here we go. Tesla has a market cap of 926 million. So this is excuse me, 926 billion. I beg your pardon. This is market cap is going to be the price of the shares times all of the outstanding shares. That is its market capitalization. And then you'll often take revenue and look at that. So this has a market cap of nearly $1 trillion and revenue of about 25 billion. The closer that revenue is to the market cap, the less expensive the company is. In this case, Tesla, again, more expensive. Now, investors are willing to pay that premium because of future earnings that they think they're going to be able to get out of Tesla, or future growth, maybe a new product, maybe a new type of car or something like that. So there's many reasons why investors would pay more for that, but this is just how you can kind of get a general idea of how to value those companies. Okay. Market cap is a traditional valuation metric. Again, this is just kind of given to you, all of that stuff there. Couple more that we can talk about real quick. And the next one's going to be enterprise value. And I don't want to necessarily bore all of you with all of the specifics of all of this, but again, I've been asked multiple times, how do I value companies using Pro? And all of this stuff is pretty much done for you here. So I really wanted to cover that real quick. Enterprise value, you'll notice here, is right under market cap. Now, you might be saying, what is enterprise value? Enterprise value is the company's debt plus the company's equity minus the company's cash position. Well, good news here. We're calculating it for you, but if you ever wanted to take a look at those raw numbers, you can literally click on the financials tab here of Pro. Here you go. Here's going to be your balance sheet. Here's going to be your income statement. So if we go back to the balance sheet here, you can see I've got liabilities and then shareholder equity, and then I also have cash as one of the line items here. So you can literally go through this yourself, or you can just kind of use the calculations that are done for you. If you need to parse all of this data, or if you need to export this data to Excel, you can use the export button that's right up here. You can do a lot of these calculations on the side. All right. So again, just going to kind of go back to the overview here. We've talked about price to earnings. We've talked about market cap. We've talked about enterprise value. All of this stuff is pretty much given to you. You don't need to do calculations for this. But there are some other things that are given to you here as well. One of those would be tangible book per share. All right. So first of all, tangible book versus book value. Book value, just the value of all of the company's assets. Tangible book value is the value of those tangible assets. So this would exclude things like patents, goodwill, things of that nature that don't necessarily have a tangible relation, like a building, for example, or a piece of machinery. There's a value to that piece of equipment there. So that's kind of figured into the book value there. Again, we're calculating a lot of this. And if you wanted some more of this data, there's also a tab at the top of Benzinga Pro here, key data. This will give you a lot of this information. All right. This will give you the PE ratio for the trailing 12 months, along with the market cap and the enterprise value. This will also give you a price to sales ratio. This will also give you an EV to EBITDA trailing 12 months value. That's another way of measuring a company's value. It's EBITDA. And you can get a lot of these ratios here. So the other thing, again, that I really wanted to stress here is on the overview tab, in a lot of cases, you can actually compare these to the industry. And you don't necessarily need to remember that the equation for enterprise value is debt plus equity minus cash. You don't need to remember those things. Pro is going to do a lot of these things for you. Instead, conceptually, maybe figure out what you're looking for, why those metrics are important to you, and then you can look and compare all of those up here in Pro. So when you're identifying a company, when you're deciding that, hey, this is a company that I want to invest in for the long run, the cost of that company, how expensive that company is going to really be important. And as mentioned, there are a number of different metrics here in Pro that you can get and determine for that.